Hey guys, welcome back to Industrial Live. I'm Jeff Hine, your host, and here it's our goal to make you more money. Today we're talking about the economic fundamentals that make up the Denver market, the Denver industrial market, and what are they indicating as far as future growth, more growth, a slowdown, both. Let's explore. So let's start with demand. The demand that makes the Denver industrial market is more and more these days the demand that makes up the economy. It's jobs, it's population growth, especially with e-commerce taking up a larger share of inventory, which is tied to retail sales. It's directly tied to consumer spending patterns, right? So population growth in Denver, although it has slowed down from years past where we peaked at around 1.6% population growth, we're still almost double the national average. We're at 1.2%. National average is 0.7% growth. Jobs are looking even stronger. Now, for tech jobs, we are experiencing year over year growth at an 8% rate, which is a historical high for Denver. And it seems like every week there's some new announcement that a Bay Area tech company is either relocating or expanding and adding hundreds of new high-paying jobs into Denver. Now, I thought that might be information bias. It's like, well, the media is feeding you what you want to hear. But I was in Grand Junction a week or two ago talking to a broker over there, and it's really two sides of the railroad tracks because it's the opposite in Grand Junction. They have big factories closing down, jobs are moving out of town, and they're not getting any of this good news that we're just getting on such a regular basis here. You almost become inundated with it. But jobs are looking really good. People love the talented workforce here, and the tax climate is a lot better than California, that's for sure. So looking at this chart here, you can see that Denver has experienced year-over-year job growth significantly higher than the United States for years now. And I'm surprised that we dipped below this year. I wonder if they're going to make that correction when they get access to more data. But we are forecasted to still have greater than average job growth going into the future. Okay, so let's talk about supply now. That's essentially new construction, new supply coming online. And how are we absorbing that supply? Is there enough demand to meet it? So generally, there's not a lot of concern about overbuilding right now because we have kept pace with the new supply entering the market. We've been absorbing about 4 million square feet a year since 2016, which has kept pace with the deliveries. Now, if you look at this under construction chart, this could be cause for concern for some people. You'll see that starting halfway through 2018 or so, construction started to tick up. But if we move on to the next chart, you'll see that relative to total inventory, Denver is actually pretty middle of the pack nationwide for industrial construction. We are neither on the high end of the spectrum, which is on the left-hand side, nor are we on the low end of the spectrum, which is on the right-hand side. So we're sort of middle of the pack as far as construction's concerned. And like I said, we've largely been absorbing the demand. That leads us on to the next topic, vacancy. We're at 5.3% vacancy right now, metro-wide. That's basically right on par with the national average of 5.1%. Now, interestingly, as I've pointed out in other videos, if you look at buildings below 100,000 square feet, then the vacancy rate is still in the mid 2%, an extremely tight market. But because all the new demand, all the new supply entering the market is these massive 100,000 square foot plus facilities, that's throwing off the numbers, and it's bringing vacancy higher. Now, moving on to the next chart, as you can see, the Denver industrial market has experienced incredible growth since the Great Recession. And although this could be a cause for concern, just looking how incredible this growth is, there's still good reason to believe that it's going to continue to grow. Now, the base case, which is a slightly optimistic prediction looking in the future, assuming that there's no giant macroeconomic catastrophes, the base case predicts that we're going to experience slower growth. So we've been growing 5, 6, 7, 8, 9% year over year. That's expected to slow down to 4, 3, 2, maybe 1%, somewhere in that range. Now, often when people hear slower growth, they think that translates into negative growth, which would be their property value declining, but it doesn't mean that. As you can see on this chart, property values are still expected to increase, just at a slower rate, which would probably be healthy considering how much growth we've had in a short period of time. And CoStar, for example, predicts that in this base case scenario, the industrial market's going to experience 20% growth in the next 5 years. And that is easily the most attractive scenario across all property types. Now, if we look at this next chart, industrial is predicted to be the best performing asset class moving forward. Even though it's experienced all that growth, you can see that we're slightly ahead of multifamily, ahead of single family, and considerably ahead of office, hotel, and retail. Now, moving on to the next chart, Denver, compared to other markets for overall real estate prospects, is expected to perform more than one standard deviation above the mean. And it's also expected to perform better than any other city in the Mountain West. One thing that I like to see is that we're also at the top or near the top of the list for home building prospects, which is a good sign for any of my fellow single family or multifamily residential investors out there. You also got to love that Denver's predicted to be one of the top performing cities for industrial. If you look at this poll, polling commercial real estate professionals from across the country, Denver's near the top of the list for buy recommendations. And it's pretty amazing that only 13% of respondents think that it's a good time to be selling, considering how far those real estate values have already gone up. So if you ask me, it's a good time to buy or to sell. Things are looking good for the Denver industrial market. Pending any macroeconomic disasters, it looks like the most likely scenario is slower growth, but still positive growth. And hopefully that keeps the market nice and consistent and predictable for both buyers and sellers for years to come. Well, thanks again for tuning in to Industrial Live. I'm your host, Jeff Hein. I'll see you next time.